Great. Welcome, everyone. Great to see some familiar faces, and we've got some new faces as well, new names. That's great. Okay, Neil, shall we kick off? I think we're 5 minutes past, right? Shall I do the intro? Excellent. So, all right, welcome everyone to the Hong Kong FinTech Association's WealthTech Committee event today. This is actually our regular slot for our committee meeting, but we've got such an A-star panel and topic today on crypto that we wanted to open it up to the broader community. Look, for those of you who are new to the FinTech Association events, a very warm welcome. A little bit about, I guess, the association and the committee. So we are an independent, not-for-profit, membership-based association, and we represent the Hong Kong FinTech community. So as an association, we do focus on a number of things. So the advocacy for development and greater investment into Hong Kong FinTech. We collaborate with organizations, right, who share similar goals to create this vibrant FinTech community. And we educate, raise awareness of FinTech by holding like regular committee meetings such as this and events. So very excited to have everyone here today. The WealthTech Committee, so I co-chair this with Neil Tan. We are one of 8 committees in the association, and as the name suggests, we focus on opportunities, right, of emerging tech in the asset and wealth management industry, especially discussing opportunities and challenges that we have with our clients through their digital transformation journey. So we meet on a monthly basis. So it's every Wednesday, the first Wednesday of every month, right, at 6 p.m. So please do reach out if you would like to find out more on how you can get involved. So as I said, I co-chair this committee with Neil Tan. My day job is I am a consulting partner with PwC, and I lead the asset and wealth management consulting team in Hong Kong. So the association has run a number of events, and Henri will be very familiar to this, both Henris, on crypto. But Neil and I were quite keen to continue this discussion from a wealth tech perspective. So introducing crypto as an alternative asset class. So I've done a lot of talking. Let me hand over to Neil so he can introduce himself and the topic, and then our panelists. All right, over to you, Neil.
Great, thanks a lot, Julie. So we've got a really exciting panel today. We've got 3 key leaders inside of the crypto space. Bipin Patel, CIO for CryptAM, which is a crypto asset management firm based out of Hong Kong. We also have Henri Chong, the CEO of FUSANG, digital stock exchange, also based in Hong Kong. And of course, everybody knows Henri, who's the partner at PwC. He's also a very key crypto leader inside of the space. If you've seen a lot of the different videos he's done is crypto capsules and so forth. So I'm not going to go into all the details of size of the market and so forth. I think we'll just go directly to quick introductions and maybe start off with Bipin and go down the line. Yep. Bipin, you're on mute.
Okay, is that better? Can you hear me now?
Yep.
Excellent, excellent. Thank you for the opportunity to be on this panel. It's a real pleasure, especially to have such a distinguished colleagues as Henri, well, 2 Henris, etc. I just want to bring up a quick slide, if you don't mind. Give me 1 second. Are you able to see this?
Yep.
Perfect, yes. Perfect. So it's just a bit of background about myself. Just for the benefit of the audience, I've been in the financial industry for the last few decades, mostly in the quantitative space, and have worked in a number of investment banks, including Barclays Capital, HSBC, Deutsche Bank, etc. In the last couple of years, I've been mainly operating within the clearinghouse and exchange space, starting from LCH in London, and I moved over to Tokyo in 2017 to advise the Tokyo Stock Exchange. And my most interesting experience has been over the last couple of years when I moved over to Hong Kong in 2019, literally as a chief risk officer responsible for financial and non-financial risks. And to my surprise, the non-financial risk aspect, operational risk and security risk aspects became quite at the forefront as I arrived 2 weeks just before the protests started in Hong Kong. So it's very different Hong Kong than I expected. But it's been a pleasure being here in Hong Kong. And over the past 5-6 years, I've also been an active investor within the crypto sector, investing in a number of startups, various projects. And most recently, since October last year, I took on the role as Chief Investment Officer for CryptAM, where we operate quantitative algo-driven strategies within the crypto sector. Thank you.
Now, can we go over to Henri Chong over at FUSANG for a quick intro?
Absolutely. Hello, everybody. Thanks, Neil, for inviting me to this today. My name is Henri Chong, and I'm the CEO of FUSANG, Asia's first digital stock exchange. And at FUSANG, we're really trying to lead the charge into what I like to call crypto 2.0, using the same underlying blockchain technology that powers assets like Bitcoin, but using it to represent real-world assets like shares, bonds, funds, etc. I'll share a slide too, since we've been asked to come out with some stuff. I want to keep this real brief so we can actually dive into talking about a real discussion. FUSANG runs a bunch of different platforms, digital infrastructure around digital securities. We've got three primary platforms. A platform we call the FUSANG Digital ID platform that we use not only to do KYC AML of users, but also to map identity against those blockchain-based securities. Because of course, when something is a real security, it has to be linked to ID, unlike a lot of other cryptocurrencies. I'm sure something we can talk about later. We run a custodial service we call the FUSANG Vault. And of course, we have a platform, the FUSANG Exchange, licensed as a stock exchange in Malaysia. Real briefly, people always ask me, why is FUSANG unique? There are so many crypto exchanges in the world. There's a lot of ticks on this slide, but I always find that this is quite useful in terms of helping highlight why we think we do some pretty unique things. There are a lot of types of exchange out there in the traditional world. On the left here, you've got what I call traditional exchanges, people like the Hong Kong Stock Exchange that take companies public, list stocks, but they run a B2B2C model. It's very intermediated. You've got the second category of exchanges here, people like ASX who are increasingly looking to use blockchain technology, but to power back-end settlement systems, not to change the front end of the customer experience. And what we're really trying to do at FUSANG is to take this model here, this fourth category, where crypto exchanges have pioneered a very customer-driven, retail-focused, what I call a B2C model, where they can allow consumers to come trade directly on exchange. They do so in a very digital-first way, a very unique way. And again, I'm sure we're going to be talking a lot about how some of these things are driving the huge interest and adoption we're seeing in the crypto market today, but they do so just for what I would call cryptocurrencies. And FUSANG tries to do a very similar model, but for digital securities. And maybe just one thing to kick off our discussion a little later, because people always ask me, well, why should I care? Why should I care about crypto? If I'm a financial institution, crypto is cool, but it's this new toy, really, right? Why should I care about this if I'm running an ECM or a DCM desk? Or I think many of the WealthTech Committee members here, why is this interesting apart from the hype that I see on CNBC? And this single chart to me really helps highlight why people should care. If you look on the left here, global equities volume last year was about $220 billion a day. That's all publicly listed stocks everywhere. Last year, crypto trading volume, daily trading volume is a significant fraction of that. And today, there have been a lot of days where actually the crypto markets do more volume than the global equities markets. And the real question that I think all of us should be asking, and certainly I guess here on this WealthTech Committee, is what is driving that? And I said, I think there are a few reasons. I think the B2C nature of cryptocurrencies, I think the fact that it's digital first, that it's mobile first, that people feel like it's an asset class they can access directly with less intermediaries. These are all things that are very interesting and things that all of us in the wealth management industry should be thinking about. What does this mean for the future of what we do? Especially because if you see, move myself out of the way, you see this chart over here on the right, I think that more and more assets are going to be put on blockchains in a very similar format to cryptocurrencies. It doesn't make any sense in today's world that you have paper shares, physical share certificates, when everything else in the world is becoming digitized. Things will become increasingly digitized. And I think that blockchain technology offers a unique solution. Still the same asset. It's not going to change.
Did we just lose Henri?
Did we lose? I think we just lost Henri.
The FTAHK gods were against that.
Yeah, I don't know how that happened. Maybe Ladane.
Lol, I hit
oh, there he is.
Instead of stop sharing. Tech failed. Anyway, real quick, as I said, to me, more and more assets are going to be digitized. They're going to be put on blockchains. And, the nature of the asset isn't going to change. These are still shares, bonds, funds, etc. Currencies are still currencies. They're still stores of value. New tech is just new tech. And the question we need to ask ourselves is, what does this mean for our industry as intermediaries in terms of how we interact with these new assets? Anyway, enough about me. I'll try not to leave the meeting again by accident.
Thanks a lot, Henri. So
I taught Henri it was the traditional stock exchanges coming after you, but here you go.
They found me and they booted me off.
Eagle eye, they're trying to control everything. All right, so thanks a lot, Henri. Passing it over to Henri A.
Thank you very much. Thanks for having us. Thanks to the FinTech Association, but also to the WealthTech Committee, and to you, Neil, and Julie, for hosting us. And most importantly, everybody listening to this at home, I know you have a busy schedule, so thanks for making time so we can share our passion of crypto and the future of money with you all. As was mentioned, my name is Henri Arslanian. Really, my passion, my focus in life is the future of money, future of finance. I do this wearing many hats. One of them is with Julie at PwC, where I'm a global crypto leader and partner at the firm, where I lead our crypto operations across 20 countries and a pretty sizable operation. To give you a size of a scale, the last 36 months, we've done over 400 crypto engagements. So very active on that perspective. The other one, even more important, is actually within the community. As many of you know, I used to chair the FinTech Association, on the board of it still, and I'm very active in the Hong Kong ecosystem. I sit on the advisory board of the regulator, the council advisors of the central bank, and so on and so forth. But most importantly, in academic capacity, where I'm an adjunct professor at the University of Hong Kong, where I had the honor of teaching the first FinTech course in the world for many years now, where there's a big component on crypto, but also then my other activities, which is as an author, and where I write numerous books. My last one being called Future of Finance, and the next one coming out later this year, but also on my social media channels, as was pointed out by Neil at the start, where I have now content on crypto, educational stuff to allow, especially our many students of the FinTech Association, to learn more about Bitcoin and cryptocurrencies. That is, by the way, now available not only in English, but also in French, Arabic, and for those of you in the mainland, in Mandarin Chinese as well. So that's it for me, and I look forward to sharing with you all today, and thanks again for having me.
Thanks a lot for all the introductions to the team. So yeah, basically just kicking it off, I think we're all here for a reason. I mean, at the end of the day, we all agree that this is an asset class. About a year ago, Goldman Sachs issued a report that's saying it wasn't. 1 year later, literally a week ago, they issued another report and saying that it is. I think everybody agrees that it is. And so if looking at that, what percentage of your overall portfolio, if you look at everything from cash to gold to equities to bonds and so on and so forth, what percentage do you think should be in crypto, and what should that crypto portfolio look like? What sort of names or what sort of classifications or themes should be inside of there? Maybe we can start that off with Bipin.
Yeah, sure. I think, look.
Oops. You went on mute, Bipin, I think.
Sorry about that. Yeah. There's a reason why there's been a lot of uncertainty around whether cryptocurrencies can be considered an asset class or not. And in some ways, I agree, and I also disagree. I agree that it can be considered a new asset class because it does provide investment opportunities in terms of the underlying technology, as well as Bitcoin, which is literally a new form of money. So from that perspective, it definitely is a new asset class. But at the same time, it also provides a new vehicle, a new approach, a new technology to represent other traditional assets. From that perspective, it's not necessarily a new asset class. But all in all, it does provide new opportunities, new investment opportunities, which haven't existed before, but also provides a technology layer to be able to manipulate and hold traditional assets in new ways, which were not possible before. So from the perspective of a portion of assets, I mean, it does range from basically your comfort level or your risk appetite. From my personal perspective, I can tell you that I do have some significant, some investments in the traditional space in terms of my pension, properties, etc. But I'm happy to say I have a very large portion of my wealth in crypto and blockchain related investments. I could say it's probably on the order of over 70 to 80%. Now, that doesn't mean that everyone will and should be comfortable with that level of exposure to cryptocurrencies, because I mean, the approach I take is actively managed, hedged in many ways, etc. But what I can say is that every investor today needs to be looking at crypto, just because, not necessarily because it is with the expectation that they will have huge opportunities and huge potential returns, but literally from the perspective that the reason, I believe one of the reasons why cryptocurrencies are creating the impact that they are is because it is a vote against the status quo. It's a vote against the continuous quantitative easing and the debasement of fiat-based assets. And therefore, I think it's a duty of all wealth managers to be understanding what's going on and to start looking at putting in place at least a minimal allocations, I would say, on a few percentage points to begin with, to get to gain a better understanding of the ecosystem.
Great, thanks. How about Henri, Fusang? How do you provide? What sort of guidance do you give your clients and so forth in terms of, the portfolio mix and so forth? What sort of names that you would recommend?
Absolutely. I like to divide what I call the digital asset universe into two halves. You have what I call digital native assets, things that only exist on blockchains like Bitcoin, which I think are fascinating. And then you have everything else, right? Digital securities or other forms of assets that fundamentally derive their value from some kind of real world asset. These could be shares, bonds, funds, real estate, I don't know, collectible cars, what have you. If it's that second category, then again, I don't think that the fact that you have a token or some kind of new way of representing that asset should have any bearing on whether or not you invest into it. It's just a new wrapper. It means that access is a bit different. Hopefully it's a bit easier and smoother to access that asset, but you fundamentally need to look at what is the underlying asset and what am I investing into. If you're buying into digital securities that represent shares of a company, the question should be, do I like this company? Do I think it's a good investment or not? No different than how you would evaluate any other traditional investment. I think it's a little more interesting when it comes to these sort of digital native assets. That is a new and quite unique asset class. That's not always easy to draw parallels to things that we've seen before. And I think when it comes to that, I think I would agree with Bipin that you need to understand what your use case is. Are you investing in this for speculation, right? As an investment, are you investing in this because you genuinely need a store of value, etc.? I meet a lot of people, including more and more sovereigns, like sovereign governments, who are very interested in allocating to Bitcoin for the same reason that they allocate to gold. It's not because they're hoping to 10x their investment and get rich quick off it. It's because they say, just in case, it is useful to have a store of value that's not linked to existing monetary settlement networks. For example, it makes a lot of countries around the world very nervous to be wholly dependent on SWIFT as a US dollar clearing network. And they're starting to look at these as alternate settlement networks. But if you're an individual and you're looking at investing to this as a pure investment, right, as a financial investment, then to me, the right approach is to actually think of it as a broad asset class and to invest in it the same way that you would look at investing into stocks. The average individual, honestly, just like they shouldn't be picking and trading stocks and actively managing the stock portfolio, and they really should just be investing in index funds, I think the average investor needs to bring the same approach to crypto. Timing markets and picking individual investments is very hard. And I think there's a strong argument to be made for individuals to just adopt a broad-based approach. I think people can and should be investing into ETFs. Those still need to be created. FUSANG is working on some of those, but I think as the market matures and we start to think of this as a real portfolio allocation as opposed to just blind speculation, people are going to need to start having the same kind of investment discipline and rigor that they would bring to any kind of asset allocation out there.
Great, thanks a lot. Henri?
Sure, maybe I'd skip a couple points. You mentioned, Neil, at the start that actually, you're right, a couple of years ago, a lot of these financial institutions didn't believe and even said Bitcoin is not an asset class. I have to say, I've been very disappointed by many of the large financial institutions. Unfortunately, many of them are members of the FinTech Association that have been very hypocritical of this. We've seen all the big banks, one of the UBS in January was mentioning that Bitcoin is a bubble and it's not even an asset class. And they announced 1 or 2 weeks ago they're getting into the space. I think it was very dishonest and hypocritical towards their clients that when these big banks didn't have a product to sell to their clients, they said it was not an asset class. And now that magically they have products to sell, they recommend clients they put it as part of the diversified portfolio. I think your clients may not be on top of the game, but they're not stupid. And unfortunately, I think this is something that a lot of the banks will pay the price over the next couple of months. One thing I'll mention is that I believe personally that I think Bitcoin and crypto has a role to play as part of a diversified portfolio. If you look at the CFA Institute, for example, very independent organization, they even mentioned that if you have a 2.5% allocation to Bitcoin as part of a diversified portfolio, it improves your returns not only on a relative basis, but also absolute basis as well. And I personally believe that in this era that we're living today, with records level of quantitative easing and real concrete risk of inflation, hyperinflation, currency devaluation, I think it will be prudent that you look at hedging your portfolio, especially when it comes to some of these things in assets that can allow you to do that, whether it's gold, whether it's Bitcoin, that's a different debate. I think Bitcoin has definitely a role to play on that perspective. The way I've been in it, as many of you know, I discuss this publicly in many of my content. I've been in crypto obviously for a couple of years. The way I've been looking at it personally, if you're just entering the crypto space, I recommend people to buy maybe Bitcoin, Ethereum. It's easy, it's liquid, easy to understand. And then normally your learning curve starts towards other assets. The way I have my crypto portfolio is about, I would say it's changed recently, but I would say it's around 60-20-20, 60% Bitcoin, 20% Ethereum, and then 20% of others, if you want. That includes many of the top 20 coins from that perspective. One piece of advice for many of your listeners today is often, just to the best way to learn about crypto, invest a little portion of it, invest a small amount. And actually, that would be the great way for you to learn about the asset class and learn how it works and so on and so forth. So that's kind of my advice I give to everybody. But I think it's if there's no doubt in my mind that crypto is here to stay, right? It's an asset that is over $1.5 trillion. Bitcoin trades now for hundreds of billions of dollars of liquidity a day. This is here to stay. And either we embrace it, or you go along, and that I think gives a lot of opportunities for many of you that work in banks and asset managers and buy side, sell side, or you kind of just disregard this because of intellectual laziness, and I think this is why I find crypto fascinating, is if you're interested, you're curious, you're hungry, and you believe in the future of finance, crypto is a rabbit hole that is super exciting to fall into. Back to you, Neil.
Yeah, definitely. I think that's a very deep rabbit hole with pretty endless these days. So obviously we've seen Elon basically move markets. I mean, people have said, we should be banning him from Twitter, but he did highlight this key fact of, or whether it's a fact or not, the ESG issue. What's the view in terms of how do we solve this environmental issue inside of the context of the mining business, right? And what do you guys think in terms of what are the potential solutions inside of there ESG wise? So maybe Henri, what's Fusang's view on that?
Absolutely. Honestly, I think that there's a whole plethora of cryptocurrencies out there. It is a weird and wonderful jungle sometimes, especially as you go deeper and deeper along that, list of, let's call it the top 100 coins. I think a lot of cryptocurrencies are still trying to figure out their use case. A lot of people are jostling to be core blockchain protocols that people will use as a way to build other layers and other applications on top. And it remains to be seen which ones of these will work. But I think as other Henri was saying, when you look at things like Bitcoin, Ethereum, these have real world use cases. And I really do think they're here to stay. It's true that the vast majority of people do not buy Bitcoin because of some kind of actual use. They're doing it as an investment because they want to, quite frankly, speculate on price. But the same thing is true of gold. The vast majority of investors into gold are there to invest into as a financial asset. But there is an anchor value of that asset because there is a utility to a certain group of people. I remember I was talking to Wenzel Cesaris a while ago. For those of you who don't know him, he started the first internet service provider in Argentina when there was literally no internet functionally for most of the population. He brought internet to Argentina. And he recently was the founder of Zappo, one of the first kind of Bitcoin custodians in the space. I remember him telling me, to a lot of people, they don't understand why Bitcoin is interesting because they're used to their national currencies being just a given. Right? We call these things fiat currencies now, and when we forget what that word means, it means, fiat, not backed by anything. And he says, I remember growing up, 3 times his family in Argentina went bankrupt because of massive exchange rate fluctuations against the US dollar. His family used to raise sheep and literally couldn't pay their bills, not because their business didn't work, because their currency just wasn't functional. And I think if you don't have to delve back very far in history to realize that there have been a lot of times with a lot of national currencies where it wasn't maybe as solid as people hoped. And that's why still today, central banks around the world buy gold. It's just part of their portfolio allocations. And increasingly, I think actually central banks around the world are going to start allocating to Bitcoin as part of their portfolio allocations. But that's why I would always encourage people to kind of start from the scratch, and say, why am I buying this? And am I buying this just for pure speculation? Am I buying this because of actual use case? They said, I can tell you there's a lot of big money very interested in Bitcoin precisely because they see it as a replacement for gold. Now, do things like Bitcoin come with issues? Absolutely. Mining gold out of the ground is energy inefficient and costly and wasteful. Unfortunately, I think that's also a lot of the value underpinning behind gold. That's why gold does have a solid value anchor. And likewise, that's why Bitcoin has a solid value anchor. Again, how some of these things evolve in the years to come, how different technology comes up, I don't know. But I think the one thing that people need to get on board, exactly as Henri Arslanian was saying, is that this as an asset class is here to stay, right? It's going to be impossible to put that genie back into the bottle. And once people realize that you can have internet money, and just like how we interact digitally like this, we spend our lives digitally, we shop online, people are going to start using digital currency. It's a next natural evolution in how I think financial markets are going to work.
Bipin, I think you guys have, I think, invested inside of a mining business, right? So what's your view in terms of the ESG elements here, or is that actually a plus for you guys?
Yeah, so a couple of things. I mean, I just want to reiterate what Henri or Fusang mentioned. I mean, in terms of the use case, if we look at definitely, I agree that the Bitcoin network running, Bitcoin blockchain network utilizes an immense amount of electricity. The question is what are we gaining? What is the value that Bitcoin creates on behalf of using that amount of electricity, which is literally a potential new form of currency, a peer-to-peer payment system, which is independent of any centralized counterparty, and hence through the ages, we started out, if we look back at the formation of money, there was a time when the initial forms of money were based on, let's say, gold bars deposited with a keeper or a custodian. The custodian would then issue cheats, a piece of paper that essentially said that this many gold bars have been deposited with me, and that piece of paper could be used in exchange for goods and services. But the problem was that soon the custodians realized that, well, they didn't necessarily have to have the deposits to issue these sheets of paper. And therefore you had, what we call inflation today. And this has been the problem with fiat currencies, is that there literally is no mechanism to limit the inflation or the risk of dilution. And the second problem is, again, related to this, which is counterparty risk. That we have to depend on a central counterparty, in this case a custodian or a central bank or central government, to be able to guarantee or back the currency. And what Bitcoin does of immense value is remove these two risks, which is counterparty credit risk and the risk of dilution. There will only ever be 21 million approximately Bitcoins ever in existence. And that is a problem that has not had any similar solution to date. So that is clearly an innovation which no other commodity even comes close to, including gold, given that there will continue to be gold that will be mined, etc. Reserves are not necessarily known. So Bitcoin has some unique properties there. In terms of mining, I think it's clear that certain sources of electricity are preferable in terms of green and renewable energy sources. So we've chosen to establish our mining operations in Scandinavia and Sweden, where we have ample supply of renewable energy in the form of hydro, wind power, etc. And so I believe that there is some improvements that can be made by moving away from dirty fuel, coal, etc., and then moving towards the use of renewables.
Henri, are you seeing a lot of clients?
Yeah, one thing I think we should add on this point, guys, on the sustainability, I think it's, first of all, it's very good that we're having this debate on ESG, right? But I think we have to compare apples to apples, right? Look at you right now, for those of you who are married, your wedding ring that you have in gold, that wedding band produces 20 tons of waste. For those of you who are looking at engaged, your girlfriend is asking you for a diamond ring, let me not even start about the environmental impact of diamond as well. So I think we have to really be careful about when we compare all these family office now talk about, is Bitcoin sustainable? Nobody asked the question about gold, right? So I think we have to be very careful about that. What is very important to understand though is, yes, Bitcoin mining, proof of work, the consensus mechanism, it consumes a lot of electricity. We call this in academic terms, we call this the impossible trinity. You cannot have something that is scalable, that is secure, at the same time that is decentralized. The Visa network is very secure, is very scalable, but it is very centralized. The Bitcoin network is decentralized, is secure, but because of that, actually has scalability problems due to the proof of work mechanism. So however, it's very important to understand, today a vast percentage of the crypto Bitcoin mining already is taking place with renewables. According to Cambridge University, 76% of miners today are utilizing renewable energies, right? But this being said, it is correct, especially during the dry season, especially in China, by the way, a lot of mining is still happening with coal. Now, I think we have to look at the practical elements to it, right? First of all, the new coins are coming up. Ethereum is a great example where they're migrating from proof of work to proof of stake, which consumes a fraction of the electricity. But second, which I think is a very, very important point, is that Bitcoin mining could actually catalyze the development of renewable energies, right? For example, right now we're seeing a big chunk of the miners in China move away from China. They'll go into Russia, Scandinavia, Kazakhstan, especially the US. I would not be surprised by next year, the majority of Bitcoin mining, today 65% of it happens in China. I would not be surprised the majority happens next year in the US, for example. However, one thing we forget right now is that over the last 10 years, the cost of renewables has gone down tremendously. It has gone down 90% when it comes to solar, has gone down 70% when it comes to wind. In many countries like the US, for example, you have excess renewable energy. For example, there's only the 3 big grids right now, you have over 200 gigawatt of electricity that is renewable, that is produced, but is not going to the grid. Why? Because the grids are not made to have all this extra electricity. This is a bit if we have 20 Teslas, but it's a one-way street going to Repulse Bay, you cannot drive faster. There's 20 Teslas, they cannot all fit in. And this is the problem we have in crypto. And the problem we have also in the traditional electricity space, we call it a duck curve, is that yes, there are periods in the morning, but also at night where there's a lot of demand for electricity. Unfortunately, as you guys know, solar electricity is not produced at night, and wind is very also difficult to forecast, but happens mainly at night as well. So what happens is with Bitcoin electricity, Bitcoin mining, which we can turn on and off whenever we want, it allows actually Bitcoin miners to be the buyer of last resort. So whenever these actually that makes renewable energy producers actually more profitable, because when there's not enough demand, for example, in the middle of the day, actually Bitcoin miners can buy this electricity. Today, the reality is actually renewable energy is by far the cheapest form of electricity. Hydro costs between 1 and 4 cents per kilowatt hour. Wind is between 2 to 5. Solar is between 3 to 4 kilowatt hour, right? This is way cheaper, is 2-3 times cheaper than coal, for example. So I think the message is, instead of actually focusing on the environmental impact of Bitcoin, let's focus on how Bitcoin mining can be used to further develop renewables and actually make them profitable, more sustainable, and that not everybody wins of that, not only the crypto community, but also society as a whole. And that's what I'm super, super excited about the next couple of months and actually what the crypto ecosystem can do when it comes to renewable mining.
Right. Great.
That's a good point. Just want to add to that. I mean, I think I very much agree with Henri. In fact, there are mechanisms that are being used within the mining sector today to actually stabilize the traditional grids, because as Henri mentioned, you have fluctuating demand versus fixed capacity and fixed supply, and so Bitcoin miners are actually assisting power supply companies and grids to stabilize, to provide a much more consistent, stable power supply, so it doesn't damage the grid as well. So there actually are potential significant benefits for the entire grid.
Great. So we talk about mass adoption. I mean, at this point, Hong Kong is in discussion about introducing different regulations to focus primarily on professional investors and so forth. So they're planning on introducing this. For all intents and purposes, some of the people that I talk to, it's almost like 20, 30, 40 years ago when people were looking at the stock exchange, and Hong Kong people are looking at it and they hear it from their friends. They go buy this, so go buy that, and pick this coin and pick that coin. Back in the day, they would pick, Hong Kong stock code 8888 just because it was a lucky number, right? So how do we kind of strike the balance here, right? Because obviously we all want to have more of this mass adoption of the crypto space. Maybe Henri, if you've got a few thoughts on that.
Sure, absolutely. And I think I've been very vocal about this, and so did the FinTech Association. I think the new rules in Hong Kong, the consultation conclusions that were announced last week, just to make a quick summary for everybody, the new rules, when they kick in, every single crypto exchange in Hong Kong will need to be regulated, which I think is excellent, and that the FinTech Association were very in favor of that. However, only professional investors will be able to buy from these regulated exchanges. What is a professional investor in Hong Kong? Very stupid rule. You need to have $8 million in liquid assets. What is liquid assets? It's actually cash and actually stocks, for example, which is actually a pretty terrible portfolio allocation these days. So I think what's really interesting is that actually I think the rules are very good, but actually I personally believe, and so is the position of FinTech Association, that we should allow retail investors to trade with these platforms. Hopefully, actually in the guidance that was issued, it was mentioned that this may change in the future, but I think the reality is you cannot stop 8 million people from not buying crypto. What they're going to do, they're going to go to peer-to-peer platforms. They're going to go to on DeFi platforms, actually probably more risky platforms overseas that are not regulated. I think that's a policy mistake, in my opinion. I think also there's two things. First, we need to allow retail investors to buy on the regulated crypto platforms. Yes, let's outlaw and let's enforce against unregulated exchanges. But second, let's allow retail, and let's also going to change potentially the definition of professional investor to show you how absurd the current rule is today. If somebody today is a crypto expert and has $100 million of Bitcoin, trades crypto day in, day out, unfortunately, you're not considered a professional investor because crypto assets do not fall within the definition of liquid assets. So even though you have $100 million in crypto, that does not count in your calculation of $1 million US in liquid assets. Ironically, a grandmother that has zero knowledge of finance, doesn't come to FinTech Association events, has no idea about crypto, can tomorrow morning will be able to go buy Bitcoin because she's considered a professional investor. I think that rule is just absurd. It's outdated and we need to change it. I think for Hong Kong to continue to remain a strong financial center and embrace digital assets, we need to change these rules and we need to allow retail investors to participate. By the way, as is the case right now in Singapore, London, the US, and pretty much any other financial center.
How about Fusang's view, Henri?
Absolutely. No, I couldn't agree more with you, Henri. And I think it's quite interesting to see that America is actually changing the way that they treat what they call qualified investors. They've recently expanded it at least a little bit to include investment professionals. Because even more absurd, as you mentioned, Henri, I could be working for a crypto hedge fund, managing money as my profession. And if I myself don't have that 8 million Hong Kong dollars, I myself am not counted as a professional investor, even though for a living, I manage money for professional investors, which just seems not quite right. So yes, I think it's high time that the entire scheme is looked at globally and it starts to be tested based on suitability, based on what your experience is, as opposed to just if you're rich, then you can get access to investments. I don't think that's the way the world should work at all. And I also 100% agree with what Henri says. I think that the Hong Kong regulators have missed a golden opportunity to actually ask people to come to Hong Kong, want to get regulated in Hong Kong and use this as a domicile for business. And, you know, as Henri was saying, if you like it or not, the crypto cat is out of the bag. People can and will find ways to buy crypto. And even if they can't do so on a Hong Kong platform, there are going to be plenty of perfectly legitimate regulated ways they can do so. America is coming up with more and more ETFs, not North America anyway, is coming up with more and more ETFs. It's only a matter of time before exchanges all over the world start listing ETFs in various portfolios. Like I said, very transparently, we Fusang are very interested in launching thematic ETFs around cryptocurrencies. But you've got things like MicroStrategy, right? I can go today and go to Robinhood and buy MicroStrategy stock, which really is just a proxy investment for crypto. So more and more people will find ways to get into these investments, whether you like it or not. And a great analogy that I like to give people is I can go to a Hong Kong broker and buy weed stocks and weed ETFs, even though weed is totally illegal in Hong Kong. It doesn't stop me from making investments into companies sitting on NASDAQ, for example. So like it or not, you know, if people want to do something, they'll find a way. And I think regulators need to be proactive to say, hey, let's actually create a framework and an environment where we can bring all of these people in. For example, I personally think that it's a big mistake to exclude peer-to-peer platforms from the regulation. I'm quite surprised by that. You know, to me, just because a platform doesn't take custody of an asset doesn't mean that it shouldn't be regulated. And well, probably should mention this on camera, but I even had a few people say, hey, did someone get bribed by a DeFi platform so that they could be exculpated from that law? Because it just means that everyone in Hong Kong, retail investors are going to end up trading on shady, unregulated DeFi exchanges. But anyway, that's that. In a larger context, though, what I do think the industry needs is for people, not just regulators, but for intermediaries, banks, as Henri was saying, to start stepping up and saying, look, like it or not, things like Bitcoin, they're here to stay. We need to figure out how we want to treat that, how we fit that into portfolio allocations. But even things that, what Fusang spends most of our time on, things like digital securities, recognizing that, hey, this is just new technology. It's like cloud computing. It's still the same fundamental premise. New tech does need new rules. It does need to be treated in a slightly different way. But fundamentally, you need to look at it from the bottom up and say, what is the underlying asset? What are we really regulating? Are these good companies or not? And I actually think there's not enough regulation in that aspect. Unfortunately, my personal belief is that there are a lot of scams going on in the crypto world, right? The vast majority of crypto tokens out there are not linked to any real projects. They're not backed by anything. I don't really know if investors realize what they're getting into. And the way in which a lot of these tokens are marketed, they're marketed as almost like proxy stocks or proxy securities, even though they're not. They can be canceled at any time in many cases. I'm personally very skeptical of things like exchange tokens. When people say, look, here's a thing and you should invest into this because it's a proxy for my business. I think that what a lot of companies should do. So if I'm not running a blockchain protocol, right? If I'm promoting a token realistically for the purposes of investment, for gathering funds, or using this to back a company, I think all of these companies should just come clean and start issuing real digital securities, real shares. I don't see any reason why you cannot have a blockchain-based token backed by something real, really represent company shares while also having utility value, while also drawing on all the reasons why people are excited about crypto and excited about the kind of alternative value networks that these utility tokens can promote, but layering that on top of real world securities, real shares, and doing both at the same time.
Bipin, you have any views on that?
Yeah, I think no, I think the Henrys have covered most of the bases, and yeah, I'm in agreement with them that I think regulation, we embrace it. I think it's important. It's very valuable for the industry, for the ecosystem. I think we do need to weed out the bad actors in the space, which there are plenty of. I think the situation today is somewhat different to a few years ago. I'd say in 2017, 2018, when we had the last bull run, when Bitcoin reached roughly $20,000 US in value. I would say at that time, close to, I would say at least over 90% of the altcoins that were available, that were trading in the marketplace, were probably close to worthless. I think that the ecosystem has evolved dramatically. I think today we have some very valuable and very exciting new protocols, not just your layer 1 tokens such as Bitcoin, Ethereum, a lot of layer 2 tokens which provide huge amounts of innovation in the FinTech space, Dfinity, the DeFi projects, Polkadot, etc. And I think that regulation across tokens as well as asset managers as well as exchanges will encourage better behavior across the markets. In terms of professional investors, I think it's unfortunate that Hong Kong has decided to apply this restriction. I think literally, in reality, the decision for an investor to invest in any security or investment opportunity should be based on their personal risk appetite and their understanding. My own belief is that regulation should play the role of policing, of weeding out bad actors and bringing to the surface bad behavior, inappropriate behavior. But I think at the end of the day, it's the investor's responsibility to do their due diligence, to understand what they're investing in, and use the resources that are out there to be able to vet not just the quality of the investment, but the quality of the people that they're dealing with. I think that's an aspect which is underrated.
Right. Great. Thanks. What's we looked at it. I mean, a lot of people have made those different types of announcements, Tesla and so forth, institutional adoption, corporate adoption in terms of building up the balance sheet or even taking it as payment. Yeah. What's the team's view in terms of this continuing, obviously with the current regulatory environment? At the same time, all the tax regimes that are suddenly appearing, when governments see money, they go after it, right? Especially if you're going to go and introduce a, $4.5 trillion budget in the US. Yeah, so maybe start off with Henri Fusang.
Absolutely. what I find interesting is, when you listen to CNBC, when markets go up, they think crypto is the best thing since sliced bread. And when markets go down, they say, oh, it's the end of the world. Even if, markets fall 20%, and even though that might be up 50% on the year, it's funny how quickly that narrative changes. I remember, there's obviously a crash a couple of weeks ago, and a lot of journalists were reaching out to me saying, hey, is this the end of crypto? And I said, wait a minute, 1 month ago, when crypto was at the same price, you said this was an unsustainable bubble. Now it's back at the same price and you say it's over. Which one is it? Very strange. And unfortunately, like with a lot of asset classes, when the price is high, everyone wants to buy it, even though that's the rule number 1 of investing, right? You want to buy low, sell high, not the other way around. If you really do believe in the asset class, it is better to get in at the low price and a higher price. But more importantly, as I was saying earlier, I think that if serious investors need to start thinking of this as part of a portfolio allocation, they should stop just trying to trade and time markets. No different than the individual investor should be out there trying to actively trade stocks. Right? If you're not an investment professional, you should deploy your money in a portfolio allocation. And honestly, you need to be a buy and hold investor. You want to take a broad-based market approach and do so as efficiently as possible. And actually, if you do that, it's not that difficult for a retail investor, right? Or unfortunately, an unsophisticated investor, as regulators like to call them, to outperform the supposedly professional investors. There are so many stats and so many studies you can look at showing that the average fund net of fees doesn't outperform the market. And that actually, if you could just buy and hold investments, you would have done just fine. Unfortunately, the way that I think the human psyche works is when we look at things a lot, we think things are more volatile, right? People view their crypto portfolios more than they view any other asset class. And so, of course, you see it going up and down every day. I talk to a lot of people here in Hong Kong, for example, who say, hey, real estate is not volatile. That's why you should buy real estate. It's stable. And I say, it's not true that it's not volatile. You just don't see the prices go up and down. If every single day you went to the market and tried to sell your house and tried to get a real market clearing price, it would be wildly different. It's just you don't get to observe it. You observe the price every year or every few years, and so you think it's not volatile. If you did the same thing for crypto, if you just checked your if you just invested into a broad-based index fund and you checked your portfolio's value every year on 1 January, you say, hey, it's great. This asset class is really not volatile and just seems to go up in a straight line. Right. So I think, just with any other investment, people need to approach this from a behavioral finance aspect and stop making basic investment mistakes and start thinking of this as long-term investors, not as a get-rich-quick scheme.
Bipin, your thoughts on the corporate and the institutional?
Yeah, I agree with Henri in that it's important whether they're corporate investors or individual investors to think about this sector and this opportunity on an extremely long-term basis. It's really a bet on the debasement and inflation that impacts the fiat currencies that we deal with every day, and really it's a potential store of value which Bitcoin can play and is playing going forward. And as Henri mentioned, it's fairly simple, I would say, but not easy to take a disciplined approach on simply buying regularly and holding. And I think this is the challenge for investors, and that's why we ourselves offer risk managed portfolio or funds for investors where they don't really have to worry about monitoring the markets, about going in, when to buy, what is a good price, etc. It's again, when you take a long-term view, then it becomes a much more clear investment opportunity.
Henri, what's the take in terms of corporate and institutional, and also I think to add on, on the DeFi front, what should people be doing on that as well?
Oh, absolutely. I mean, first of all, I think we're definitely seeing increased, the entire crypto fund space is growing tremendously. Just to put things in perspective, we just released our PwC Elwood and AMA hedge fund report on Monday. The total size of the crypto hedge fund ecosystem went from 2 billion to 3.8 billion. That's almost doubling in size in last year. And obviously, what's really interesting though there is 84% of investors are either high net worth individuals or family offices, right? So there's a lot of capital on that side. What I think is obviously for me, the very good indicator is obviously what's happening with traditional hedge funds. For example, this year, AMA surveyed $180 billion of AUM of traditional hedge funds. And the data showed that 47% of them have either invested or are looking to invest into crypto. And what's interesting for those who have already invested, 86% are looking at allocating even more capital to it. So this is obviously becoming a big asset class. Just to put things in perspective, right? In 1997, the total hedge fund AUM, traditional hedge funds, was around $180 billion, more or less. Today, it's around $4 trillion. So in 20 years or so, went from literally from 180 billion to 4 trillion. Today, the crypto hedge fund ecosystem is less than 4 billion. So even if the traditional crypto hedge fund industry becomes 10% only of a traditional hedge fund industry, that's 100x growth from where we are right now. So this is happening. There's a lot of institutional opportunities in this space. For those of you listening, for those of you who are students listening, for example, those of you working at banks, this is a great space to focus on. You can make great careers on this perspective. You know, I said as a partner at PwC, I see all these young guys join PwC and then they become analysts and they go up the ranks and they do all the boring stuff that we've done for 150 years. If people start focusing on crypto, you focus on these areas where there's going to be massive leaps. This is how you personally grow, but also how in your professional career as well, you can take leaps of bounds ahead. So my big message to a lot of people is that just inspires to focus on. There's a lot of opportunities. These type of opportunities happens once or twice in your career, and try to grab it when it's here.
Absolutely agree. Running out of time, actually, we're a little bit over time. Maybe some closing remarks. Maybe Bipin. What are your views in terms of the market? What do you think about DeFi? And what do you think Bitcoin will close at the end of the year? High speed.
Okay. Yeah. Look. As Henri mentioned, look, I would say it's not that you just get this kind of opportunity, once in a while. I'd say the crypto opportunity is probably once in a lifetime. It's a very unique time. I'd say, jump in and learn as much as you can about it. In terms of price, I don't know exactly where it's going to end at the end of the year, but I am optimistic that it will reach 175K before the year end.
Very aggressive. Yeah, nice. How about Henri Fusang? Henri.
I'll leave it to other people to give price predictions, but maybe just something as an interesting, thought experiments. Alan Turing came up with the first computing machine in 1944. Nixon brought the US off the gold standard in 1971. Computers have been around a lot longer than we've had fiat currencies for. It's been 50 years. And I wouldn't be surprised if when the world looks back one day, we'll see fiat currencies as a very short-lived experiment and maybe not necessarily the best one, And in the 1970s, the minute the US went off the gold standard, it promptly entered into a period of hyperinflation. So when we look back on all of this, I wouldn't be surprised if you say, yeah, some things like Bitcoin and similar cryptocurrencies are us returning to a kind of store of value or medium of exchange that's a little more backed, a little more solid, a little more stable, and not merely down to the fiat, the whims of certain governments. And now's the time to focus on not so much the technology, but the use cases, as they say, right? How do we actually bring this into real adoption? Or how can we use that technology to start representing all kinds of assets today that are based on pieces of paper? And to give people an idea of what I think the potential of the market is going forward, especially around things like digital securities. When you look around you, the buildings you're in, the companies you work for, all of these are assets. And right now, all of that is represented by a slip of paper somewhere, or a PDF of a slip of paper, which to me is the same thing, right? All of these things can and will become digitized, especially as we move into an increasing digital world. But it's just new tech, just like e-commerce was new tech, right? Or social media was new tech. The question is always, as Henry was saying quite rightly, how do all of us in this room, and I'm willing to bet a lot of us are thinking about this maybe from a personal investment angle, but also from the institutions, right, or the companies that we work for. How do we access this new trend? Where are the opportunities? And I think the answer is that whenever we have these shifts in technology, a lot of the jobs to be done are still the same. Right? The world is still going to need investment advisors. The world is still going to need banks and brokers and exchanges and custodians and all the rest of it. That when the tech changes, often the people who play those roles changes very dramatically as well. So, yeah.
Right. Henri, closing remarks on this?
Yeah, just to wrap it up, guys. I mean, I think this is very, very exciting. And if there's one piece of advice I have to everybody, put the half an hour in your calendar this weekend. Go just read about Bitcoin, read about crypto. There's a lot of, you don't need to read the white papers now. There's a lot of available videos on YouTube and others, education videos. I put a link to my YouTube channel if you're interested. What do you find? I think just also buy a bit of crypto. Best way to learn from that perspective, gets your hands dirty on that perspective. You may love Bitcoin, you may hate it, you may love crypto, you may hate it, but I think all of us have this intellectual duty to at least understand what it is and what the impact could be, not only on our companies we work for and personally, but also society as a whole more broadly. When it comes to a price prediction, I get asked this all the time. I can tell you what the real experts say in our PwC Crypto Hedge Fund report that was published on Monday. From all the crypto hedge funds, all the smart guys in the room, the median price prediction for December 31st was $100,000 US. I tend to agree, and there's a lot of logic to that. If you look at the stock to flow ratio, whether you use it, you look at usage metrics, there's a lot of ways we look at the value of Bitcoin. And I think that's very interesting that that's the kind of price target people have, $100,000 of Bitcoin by the end of the year. And by the way, the majority also believe the market cap, total market cap, will be between $2 to $5 trillion. It's around 1.5 today as we speak.
Right. Great. Thank you to the entire panel. I'll hand it back to Julie to close out.
Hey, thanks, Neil. No, probably not much further to add. Thanks again to him from FUSANG, Henri Arslanian, my great colleague here at PwC, and also Bipin Patel. Thanks, Neil, for moderating the session. It was great flow. I think we had a great turnout. Unfortunately, yeah, we didn't have time to take questions, from the audience. But thanks for posting your links. I mean, please do reach out. I'm sure Bipin, Henri, and two Henrys would be more than happy to entertain direct questions, etc. Yeah, please do sign on to WealthTech Committee. We'll be running another session next month. Yeah, thanks again.
Thanks, everybody.
Thanks, everyone.
Thank you.
Thanks a lot to the panelists.
Take care.
Thank you. Yep. Bye-bye.
Bye-bye.